Hello, everyone, and welcome back. Today, we're diving into one of the most astonishing market stories of 2025. Regencell Bioscience Holdings, ticker RGC, a Hong Kong based startup that has never booked a single dollar of revenue, has exploded almost 60,000% this year and now commands a stock market value larger than Lululemon, eBay, and Kraft Heinz. 12 months ago, its shares traded for pennies. This week, they were changing hands in the hundreds of dollars after a 38-for-1 stock split that took effect on June 2nd. On Monday, the stock tripled, closing up roughly 280%, and it tacked on another 30% the very next day, lifting the company's capitalization past $36 billion. So who is Regencell? Founded in 2014, and listed on the NASDAQ since 2021, the company says it is developing liquid, orally taken traditional Chinese medicine formulas aimed at treating childhood ADHD and autism. The science, according to the firm, is rooted in Sik-Kee autism brain theory, named after the practitioner who devised it and who happens to be the father of Regencell's chief executive, Yat-Gai Ao. The younger All controls roughly 86% of all outstanding shares, so the public float is razor thin. 3 proprietary herbal blends form the core of the pipeline, each containing what the company vaguely calls detoxification, blood circulation, and digestion herbs. Yet, in its most recent SEC filing, Regencell admits it has no revenue, no regulatory submissions, no granted patents, and no distribution network, while losses have totaled more than $10 million over the last 2 fiscal years. If nothing fundamental has changed, why the stampede? Company management says the stock split was meant only to enhance liquidity by lowering the price per share, a tactic that often attracts retail traders looking for cheap tickets to a presumed moonshot. The broader backdrop also matters. Alternative medicine has been in the headlines since February, when vaccine skeptic Robert F. Kennedy Jr. became U.S. Secretary of Health and Human Services and began rolling back routine immunization programs. Whether that policy shift directly fuels enthusiasm for herbal remedies is hard to prove, but it has certainly pushed non-traditional health ideas into the spotlight. Regencell's chart, however, is anything but a straight lineup. One-day swings of 30% are common. On March 21st, the shares surged, only to erase the entire move the next session. Online chatter mirrors the volatility. Reddit users joke that the stock trades like a meme coin. LinkedIn investors admit they are laughing out loud at the company description. And day traders brag about scalping small intraday profits while warning newcomers that prices can have without warning. Veteran market watchers may recall AMTD Digital, another thinly traded Hong Kong name that in August 2022 briefly vaulted past Coca-Cola and Bank of America before crashing back to earth. Regencell feels like deja vu, a minuscule float, an overseas domicile, an opaque business model, and a summer trading lull that magnifies every buy order into a price tsunami. None of this means Regencell cannot one day succeed. But buying at a $36 billion valuation is essentially wagering that unproven herbal concoctions will eventually generate revenue on the scale of established pharmaceutical giants. For most investors, that is an extraordinarily tall order. In the meantime, the story serves as a vivid reminder that in markets, narrative and liquidity can overwhelm fundamental analysis, at least for a while. So is Regencell a future biotech superstar or 2025's most spectacular cautionary tale? Only time, and perhaps the FDA, will decide. Until then, stay curious, stay skeptical, and always do your own research before jumping into any stock that is up 59,000%. Thanks for listening, and I'll see you next time.